Silicon Valley Bank in Santa Clara County, California was a commercial bank chartered by the state of California. The bank is the 16th largest in the U.S., with some $209 billion in assets as of December 31, 2022. On March 10, 2023, Silicon Valley Bank was taken into receivership by the Federal Deposit Insurance Corporation, which marked the second largest bank failure in American financial history, and the largest bank failure since 2008. So what happened to Silicon Valley Bank? In 1983, Bill Biggerstaff and Robert Meteris founded Silicon Valley Bankshares, which then later renamed Silicon Valley Bank SVB. The bank's first location was in downtown San Jose, California. Later on, it opened an office in Palo Alto. The bank's initial focus was on collecting deposits from businesses that receive finance through venture capital. Later on, Silicon Valley Bank expanded its services to finance venture capitalists and added offerings that enabled it to retain clients as it progressed beyond their starting phase and eventually post-IPO. Silicon Valley Bank went public in 1988 and raised $6 million later on. Another office opened in San Jose the same year. Silicon Valley Bank expanded to the East Coast by offering its first office near Boston in 1990 to serve the tech corridor in the Boston area. The following year, Silicon Valley Bank expanded globally with the launch of Pacific Rim and Trade Finance. Now 40 years later, Silicon Valley Bank has expanded to become one of the biggest banks in America's financial system, with yearly revenue of $7.4 billion in 2022 and 8,500 employees. During the COVID-19 pandemic's tech industry boom, Silicon Valley Bank deposits soared from $62 billion in March 2020 to $124 billion in March 2021, just 1 year later. Since 2022, in response to increasing inflation, the Federal Reserve began to raise interest rates. As a result, bond prices started to decrease. Consequently, the older bonds which were issued at the lower interest rate became less valuable and their market price dropped below face value. This situation led to significant losses for Silicon Valley Bank, which had mark-to-market losses in excess of $15 billion at the end of 2022 for securities held to maturity, according to Bloomberg News. As interest rates continued to increase, many of Silicon Valley Bank bonds were yielding at the average of only 1.79%, making the bank look like an underperformer relative to its peers. As a reaction, SVB chose to sell $21 billion of bonds at a $1.8 billion loss. Higher interest rates also makes it increasingly costly for private fundraising. Startups started to withdraw money to meet their needs. As a result, Silicon Valley Bank had to find ways this week to meet the withdrawals of its customers. Moody's downgraded Silicon Valley Bank on March 8. The announcement led to a significant drop in Silicon Valley Bank financial shares, falling more than 62%. Additionally, startups withdrew their deposits from the bank, leading to $42 billion withdrawals, about a quarter of the bank's total deposits. On March 9, the bank was left with a negative cash flow of around $958 million. By the end of Thursday, SVB had a cash deficit of almost $1 billion and was unable to fulfill its outgoing payments to the Fed. On the morning of March 10, agents from Federal Reserve and the Federal Deposit Insurance Corporation arrived at Silicon Valley Bank's offices to examine the corp finances. Later that day, the California Department of Finance Protection and Innovation took possession of Silicon Valley Bank due to inadequate liquidity and insolvency and appointed the FDIC as receiver. Approximately 89% of the deposits in receivership were uninsured, and the FDIC is seeking a buyer for the field institution to make uninsured depositors whole. The collapse of Silicon Valley Bank has had a far-reaching impact on the tech industry, affecting not only startups but also established companies such as Roku, Roblox, and Vimeo. Those startups were unable to recover their funds, forcing them to take out the loans to pay their employees. The collapse of SVB has raised the concerns about stability of other banks such as First Republic Bank and the Western Alliance Bank Corporation, and caused a decline in financial services sector. In summary, the collapse of Silicon Valley Bank, which occurred during a year of tech restructuring and layoffs, has added another layer of uncertainty to the community of innovation. Although it's unlikely that SVB's clients will suffer significant losses from the bank's closure, the future of tech investment remains unstable.